Okay, how's everyone feeling after this trading week? We finally got a little bit of a gut check out there, I think, across lots of folks. I felt it Thursday. We saw that deleveraging sort of momentum cascade down. It continued into the after hours and really caused some second guessing, I think. And to really just put the trader hat on, the trader educator hat on first here, I think, if you felt uncomfortable, a little queasy on Thursday about the losses in the account, I think that's the gut check wake up call, just to remind everyone how much risk has been concentrated in a few dozen names, let's call it. And I think if you were wrapped up in that, you certainly felt it. I had some exposure, thankfully not a tremendous amount, but it was still very volatile across all my trading accounts the second half of this week. So we're going to talk about earnings. We're going to talk about sort of the landscape of the market environment, because it is shifting. There are things we need to be aware of now as traders. So let's get into it. Our video is sponsored by Investors Business Daily. We've got discounts in the description of this show. They've got their new Market Surge beta out, and I've been using it. It's got a lot more features than their old kind of just more static legacy charting platform. So you'll want to check that out with the link in the description of this show. Now, we'll start with AMD, because AMD really was one of the first to kind of hit the scenes with some intense volatility and to show sort of the intention of the market this week. AMD reported earnings and they were pretty good, right? Like, there really wasn't too much wrong with their report. Maybe their guide was, slightly at expectations and not just a total acceleration. But this really kind of shows us what happens when trades get crowded, positioning gets stacked, and then expectations are high. And so I think AMD really ran into that situation. It had one of its worst days, 20% down, and really put a lot of pressure and, again, kind of illustrated this point of lofty expectations. Now, Alphabet also reported earnings this week, and it was a great quarter. Again, I think everyone expected it would be great. $185 billion on capex spend. We're at the point of the cycle now where this really isn't being rewarded. Usually, when companies want to spend aggressively, if the market isn't a good state, that's a rally sort of situation, because it shows growth, it shows taking initiative and market share and future cash flows. But now these numbers are getting so large, and we're at the point of the cycle where this tends to be more now seen as a negative when some of these big companies or small companies are investing so much. Now, Alphabet, still out of the Mag 7, took it the best. It did have a pretty, decent size gap down, but it got bid up here. And we're going to look at all of these charts in real time at the end of this episode. Now, Amazon, again, on the same exact theme, kind of spooks investors on their spend, on their guidance, and this did not recover as cleanly. This had a sharp kind of 6% fall here to finish off the week. It had been moving sideways here. There was a lot of pent-up kind of range-bound trading. We now broke below it, so we need to see if buyers can truly kind of come in here and sustain this. This is the state of Mag 7 at this point. This is year to date. Year to date, of course, is only a month, but there's a lot of red here, and this chart skews negative. It's really Google that is trying to hold and buck the trend, and Apple, right, has been chugging along. No real issues there with Apple. They're kind of not involved in this AI arms race of spending a ton of money. It seems like they're sitting on a device that will have to, kind of serve all of these aggressive spenders one way or the other. And so those are the two shining spots right now. Microsoft at the bottom of the list, a big decline here and spread between best and worst. Now, again, more heavy hitters this week is Palantir. This quarter, again, was fantastic. The numbers are as good as we may have ever seen for such a scale company and such growth coming relentlessly. The stock did gap up, but then it failed and then continued lower through the rest of the week. And here is the software index. Everyone is aware of this now, and everyone is paying attention to it. I posted this chart earlier in the week referencing the $77 area, which is back from the tariff sort of tantrum that the market was dealing with. This is sort of the zone I would be paying attention to. We'll look at this chart in real time in just a little bit. So this was the performance this week. It was the Dow Jones up 2.5%. If you were an old school blue chip Dow investor, you saw nothing wrong with this week. It was lovely and uneventful. But if you were a tech investor, you felt the pain, down 2%, and somewhere in between lies everything else. This is the Dow Jones. I mean, this is a textbook and clean and clear and wonderful of a technical breakout setup. This is Friday's candle breaking out above $500 after a tight and orderly sideways range. You're seeing dispersion in the market, changing of leadership. We've talked about this now all year long. It's not just a tech-led market anymore. There are other sectors working, and this week was more evidence. Now, S&P 500 V-shaped recovery into the weekend. I am pretty surprised we got such a rebound here, but I think the fact that the market caught its footings and didn't sort of spiral certainly saved I think some faces and some traders. And again, I think with this bounce back that we saw on Friday, back to that gut check on Thursday, don't sort of forget the risk that you have on, right? Use it as an opportunity to perhaps take risk down if it's something that kept you up at night and had you worried. This is not a time necessarily to just say, oh, okay, yeah, I knew I'd be right, and kind of forget the lessons, so to speak. If we look at the VIX, it did spike above 20, but it came back down into the teens here, still holding up pretty high. So we're up around 17, 18 or so, which is, again, a little bit high on recent trading. US dollar strength mostly still here, kind of trailed off a little bit into the weekend, but generally speaking strong. And treasury yields are still staying pretty tight. So we broke above 4.2. We're back to testing 4.2, got as high as 4.3. We're kind of sandwiched here. We're very tight. And so we do still just want to pay attention to this, but there's no big movement. Sector performance this week, again, it was not tech, it was consumer staples, it was industrials, it was materials, it was energy. These sectors of the market are basically sectors of the market that everyone has underweight or has no real exposure, likely, right? Given the past 5, 6, 7, 8, 9 years in the market, right? Where it has been communication services and technology and semiconductors. And so these spots were working, and we saw, again, a lot of pain across those latter ones I just mentioned. If we look at our kind of trend momentum model here, staples, industrials, materials, energy, top of the list here. These didn't just turn up green this week, right? We've had buy signals on these for a few weeks now at least. So these trends are continuing. We've got a handful here kind of stuck in the middle, and then we've got an outright sell signal on tech, discretionary, and communication services. So 52-week highs and lows underneath the hood, market breadth, it's still actually holding up, right? And that's because of the dispersion out there, or really just the average stock really getting a little bit of love now, and the mega caps are taking a little bit of a breather here. Not too much to say about either of those charts. Bitcoin. Okay, so Bitcoin was a fascinating watch this week. So this is IBIT, traded the heaviest volume that it ever has, basically $10 billion on Thursday's trading session, which totally just kind of cascaded downward in this very nasty spiral, got as low as 60,000 in the after hours. And if we look at Bitcoin's implied volatility, we got, this chart only goes back to 23, but still you got a spike up to north of 90% implied volatility, making that basically one of the top 5 or so events for volatility in Bitcoin. Combine that with the heavy volume, combine that with one of the lowest weekly RSI readings, combine that with all of the usual X accounts that were out kind of dancing on Bitcoin's grave, and you had the ingredients, of course, not that it was easy, but you had the ingredients to kind of come in and create a snapback rally here on Friday. Now, look, the 10% recovery in Bitcoin up to 70K, it's great. There's still a tremendous amount of technical damage that has been done in the Bitcoin market. And the thing that I would say about this move is this last leg here on Thursday definitely took me for surprise on how fast that ball started to roll downhill. But this has been in a technical downtrend almost any way you cut it for at least weeks, if not months, right? We've been here on the show talking about a bearish to occasionally a slightly neutral outlook, right? We had a couple of, we had an attempt in here when it was range bound and sideways trying to put in a higher low. So you had some tactical opportunities. But the trend here has been very clearly down, right? All of our models have been away from Bitcoin, essentially deleveraged at minimums for a while now. So we'll see how much recovery this bounce can get. Maybe there's some room back up to 80K over the next week or two if this was a good flush. It felt like a good flush, but you're still in a downtrend. And so let's see where this market wants to go. Next week, I think the big story is we are going to get that jobs report, if I'm not mistaken, out next week. I don't know the date, but the one that we missed due to the government partial shutdown is going to be reported next week. So I think it might be Wednesday. So double check that because that will be market moving. And I think that's it. Let's get into some charts. All right, we've got TC 2000 open here. We're going to start it off with the S&P 500. I mean, take a look at this chart. This is a daily chart, this Friday session. I mean, talk about a market that just won't die. Here's a weekly chart. So zoomed out, if we clean this up a little bit, you can see that we're at a total stalemate here for the S&P 500 largely over the past, certainly the past month, but really if you go back the past 3 months, and there hasn't been a whole lot of movement here. We are really spending a lot of energy in this range here, and we're making some violent pushes up and down. And so, you know, as we always say, and is as classic as it comes, compression like this, right? Range sideways vol compression is what leads to vol expansion. It's what leads to breakouts. Take a look at the high to low range this week, right? So with a VIX at 18, the S&P 500 had a high to low range of 3%. So it's stirring, and there is some violent moves happening here on this day-to-day swing. So let's be prepared because 6,800 on the downside, 7,000 on the upside. Those are your, kind of ranges here that the market keeps fading those extremes. But when we finally make a more convincing move, then we're going to start to go much more likely in that trend direction. Here's the NASDAQ 100. Now, this doesn't look as pretty, right? We talked last week, right? We had a very pointed discussion here on this wick and this right in here. And we said, maybe that would be it, right? We didn't call it. It's not a call. It's not a victory lap, but we looked at this and we said, let's keep an open mind, because what if that was the double top sort of retest failure point? And look, probabilities kind of stack a little bit more after this week, because as again, buyers stepped in off the lows, it's a bit of a follow through week down. This is the weekly chart for Qs. Again, levels are pretty clear here. If we start taking out 630 on the upside, then it's, could turn into a big fueled up continuation pattern that can really surge us in a powerful trend up. And on the downside, 605 or so. I mean, if we start really losing that, and we're having a lot of trouble losing that, we keep getting some powerful 2-day sell-offs, but then they cannot manifest. We cannot get that, snowball to really spiral like Bitcoin has to the downside. And so until that happens, where you start to break some of these bigger levels, then I think we're range bound. We're going to frustrate the majority, and we're going to look at the 50-day or 200-day SMA too much. But I mean, look where we are now. The 50 SMA is just flatlining in the middle of this range, which just indicates chop and indecision. And the 200 period simple moving average has nearly caught up with price. And so it just goes to show how long we're spending here. And again, this will be a meaningful directional breakout when and if when it happens, not if, right? It's just a matter of time before this makes the move. Really going back to October, you could say that this market is largely just sideways and fueling up. So I think this is the most interesting market. Friday saved a lot of technical damage here. If we would have ended weak or below or around 600, this would look a lot worse and a lot more ominous. But, maybe a lot of hedgers that got just bought back, and some of those Vanna flows, charm flows, really sort of kicking in and helping create a bid in this market. But we're not really making any meaningful progress. So I would say be vigilant with risk. Again, you saw how fast things can spiral, maybe not at the index level, but certainly the individual stock level. And so let's just keep that in mind. Russell 2000 here looks great, right? I mean, it's just kind of the best in the bunch here, more of a kind of flag-like pattern, almost a new weekly high close, trying to break out here. So this looks pretty, comfortable in trend, in motion here from the index standpoint. If we take a look here at gold, it did close up 2.36%. Remember, last week was one of the heaviest volume weeks we've ever seen for metals. Big kind of topping candle. There was no follow through, right? So again, maybe more frustration here on lack of trend, but gold, you saw volume dry up on a relative basis, and you saw kind of compression here in range. And so, jury is still out on which way we break to get a second retest of the highs, or if we make a second leg lower. We're kind of pinned here around 450. I still like gold. We're still heavily invested in gold. We are hedging our exposure. We have stops in place, but we still have, call it, oversized position here in GLD that we've carried for some time. Silver, definitely weaker, right? If we throw in the weekly chart here, this made progress lower. Heavier volume came in. Looks just technically weaker. Looks like it wants to perhaps kind of come back down and probe 60. I don't have a position here in silver. I don't like it as much from the kind of bigger macro trade perspective. I think it could easily continue to rally with metals, gold, copper, all the other aluminum, zinc, but I just don't have a strong position. I don't have a position here in SLV, but it's notably weaker. So just be a little bit careful there. Bitcoin, we already pretty much talked about here. I mean, the pattern is pretty abysmal. I mean, it feels like a pretty good washout. It was, on this latest leg down 36% in basically a straight line. You kind of had your measured move here. So you kind of had your first leg down right in here, and then you just made your second leg and kind of completed that move. Well, I didn't do percentages, but if you did percentages, you basically made a measured move down. So heavy volume came through. I think we're in bounce mode tactically, but still think you have to be very careful overstaying your welcome in Bitcoin at this point. XLE, I think, is, speaks for itself. So up 4% this week. Didn't really see much carnage, didn't get pulled down with the market. Volume still coming in. The trend is still up. It's a great place for relative rotation. Materials, XLB, Weekly chart up 4.5%. Again, heavy volume coming in, kind of a flight to safety here. And from a trading standpoint, I still like XBI. I think some people maybe are forgetting about it, but biotech, I think XLV, if you're, in the lower beta kind of camp here, XLV, I have a position. I like it. I think it looks good. Biotech, really just spending a lot of time going sideways. I still have a position. I have a position here, more recent position. So we'll see if it can play catch up. Did see some volatility this week, but I think these areas of the market, XLE, XLB, industrials, Dow Jones, right, XBI, these are all interesting spots. XME, talked about this, even, back to the metals trade. Still like this area, a little more comfortable there than like a GDX or a silver or anything like that. So I still have a position here as well in XME. So I think that's everything on the majors. Let's look at software land, because like I said, I posted the IGV chart earlier in the week, and I was really sort of referencing this big area down here. And we didn't quite get down there, but who's to say we can't next week? We are seeing a lot of volume come in. We did get a bounce here on Friday, just like Bitcoin. In fact, if you overlay these two together, they look, eerily similar. But just like Bitcoin, there's a ton of technical damage. And so trying to pick a bottom here is going to be uniquely difficult. I do like this general area down here, so maybe some put selling, but I also don't like the ETF that much. I do think you need to spend the time looking at the individual constituents. We can do some of that right now. I mean, Microsoft is a huge weight. Microsoft Mag 7 stock kind of came back in and filled this gap. So that was nice to see. Microsoft in probably one of the biggest drawdowns it's had in quite some time, 30%. Weekly chart is here. So again, lots of technical damage, heavy volume weeks, kind of coming back to some prior support around this 380 area. Makes sense for it to start to bounce and find a little bit of support. Oracle, another heavyweight in the software space. Again, this is really the epicenter of all that is concerning about the AI build out sort of trade. Oracle is down in one of its largest drawdowns, so 60%. It came back, filled some gaps. Looks like there's one more gap over here that it could fill. And then, of course, you've got just some bigger cluster of lows around 125. So, we may have one more ugly push down here on Oracle to get to some bigger support. And still the stock sold off pretty aggressively. Looks like you got more of a topping pattern that's potentially kind of rolling over here. So you do need to be careful if this is, 4 months of distribution and we are about to roll over and sustain lower. As good as those numbers are, I mean, you could come all the way back to $70. And again, as good as those numbers are, it's still an extremely high price to earnings ratio, but the market is pricing in so much future growth. But, you could really kind of come back down to some bigger levels. Again, it's not a call. It's not saying that it has to go down there. But if this top really does stick as a top, then you've got time to kind of buy this or play this trade. Let's move quicker here because we're going long. Hood is another one. I really like Hood. Got as low as about 72. I think they have earnings next week. I think it's interesting. You have a very similar situation though, whereas if this is a top here for Robinhood, then, you could really kind of reset back to some much bigger levels if this is going to stick. And I think this is the worry right now, where some of the indices got, repriced back up into their range. When you look at things like Bitcoin and software stocks and select AI stocks, you saw just a lot more technical damage really unfold. And so this is where there's opportunity, but there's also risk. You could look at SoFi, again, very similar kind of broadening, topping type action here that broke down and is making an initial leg down. CrowdStrike, different pattern here, but software is tough, right? So that's the spiel. Let me show you some names here from our trading systems. So this is our new kind of homepage portal for Trade Risk subscribers. We're looking at a preview version of an update that's not live yet, but kind of have this new home base that we're making here, where you can kind of come in, check the dashboard, check how the S&P 500 did, check how our Galahad portfolio did, how our Quant Rockets momentum system did, and then check in on signals. I want to show you 3 names I have on my watch list right here. We already sort of talked about LABU. This is the XBI biotech. This is the 3X ETF. And so our model got involved at this towards the highs here. Let's see, there it is. Kind of bought pretty close as we were breaking out here. So it had an early entry that is so far wrong, but I still like the premise of the trade. Our model still likes it. It's on thin ice in terms of when it could get kicked out, because if it starts rolling over, below Thursday's lows, or, start to make below Friday's lows, it'll likely get kicked out because momentum has sufficiently weakened. But for now, it's hanging on. It's still in here. I still have a position. And again, we're in at 193. Any of these prices is a cheaper price than we currently paid. VRT Veritativ. So I haven't talked about this one in a while, but this is also on our momentum model. This is a name that we got involved in back here in January, the beginning of the month, and we paid 169 for it. It had a nice rebound session on Friday. Notice that there wasn't a tremendous amount of technical damage here, right, on the Thursday sell-off and the Wednesday sell-off. And so this, again, shoring up nicely. I have a position, full disclosure. Our model likes it. We're up 15% on it. And the last one I'll highlight for this week is Sterling. This is more on the infrastructure side. And this one had, again, a big day on Friday, a little bit of a thinner name, but we got involved in this at 338 back here again at the middle of January, kind of based out nicely. And it seems like it's trying to make this second leg up. Again, if you look at the selling here on Thursday and Wednesday, much more contained, better technical structure, not breaking down to some big levels. And so these are the names that I think, we saw a lot of exits from our momentum model this week. There was a lot of kind of pruning of the list of risk management taking priority, but we still have about 20 names here. And these names are, kind of held in there and seem to be trying to resolve stronger. And so that's what we're trying to focus down in on right now. So that's it. A little bit long this week, but there was lots to talk about. Hopefully you made it through okay. If you didn't, well, look, you got to learn from the mistakes and the positioning that you have on, and hopefully we helped in this video. Check out links in the description of the show, our sponsor IBD, our trading systems, Galahad, our all-weather system, and our momentum model, Quant Rockets. Thanks so much for tuning in. I hope you have a great weekend. We'll see you back here next Friday. Take care.